A stock gaps up, a stock gaps down. Is this thing going to be a gapper? What are these people talking about? I'm Clay, let me explain. Now, before I can get into what a gap actually is, a gap up, a gap down, let me just establish a little context of how the market works. And the way the stock market works is this is just going to represent time. So you have this whole time period right here. And within this time period, you have what I'll call, the traditional market hours. So from the Eastern time perspective, that is 9:30 a.m., again, Eastern, EST, and then 4 p.m. Eastern, so EST. And then again, this is, like I said, this is when everybody usually trades. That's kind of we'll quote call it the normal period of trading. But that's not really the entire story, because the other part that needs to be kept in mind is what's happening from here to there, and then from here to there. So in kind of trading jargon, this is what we would call pre-market, meaning it's, before, right? Before the market actually opens at 9:30. And then here, it's kind of, there's many terms out there, after hours, post-market, but I'm just gonna call it post-market, right? Again, post meaning after. The market has closed and you have this period. Now, what is this period? Well, in this period, you can still trade. So you can still execute trades if you want to. Now, the one little disclaimer with that, I'll put kind of a little asterisk here. And the asterisk down here being, you need what's called a direct access broker. Many brokers out there, probably E-Trade. I don't know if E-Trade allows pre or post-market trading, but a lot of the, Charles Schwab, Fidelity, those sorts of brokers, they're not allowing you to actually partake in this pre or post-market period of time. They're only allowing you to take place in the normal hours. So that is how the market is broken down. So again, I can see the question right now. Well, how do I get access to this? Well, you would need a direct access broker. The one I use is Lightspeed, for example, Interactive Brokers, and then there's other ones out there, but that would be the key, some sort of direct access broker. So how does this all actually pertain to gap ups? Well, the way a gap up works is at right here, and I'm just going to make this up. Let's talk about stock. And I'm going to get real creative here. ABC, okay? So ABC at that point, let's just say the closing price is $10. So $10 closing price. It just ends. But then during this period of time in the after hours, the post-market, bad news comes out for that company. Really bad news. Now, people that are able to, trade this and still to partake, oh, wow, that's bad news. I want out, I want out, I want out. So people are going to be selling. So that means the next day when we come back around here to the normal market hour, because people were, selling and getting out, what does that do? Well, that would create a gap down, meaning the price closed, I'll come right up here, at 10. So that was the close. But because of that bad news that happened in after hours and then pre-market, people are selling. So therefore, the price is going to open up at, let's just say, $9.50. That means it was a gap down because the price was up here and now it's only worth $9.50, hence a gap down. Now, gap downs can occur for many other reasons, earnings, just random news. But in this case, I just say something bad came out about it. On the flip side, though, and maybe you see where I'm headed with this, let's say that, again, it closes at 10. So a $10 close. But then good news comes out. Some sort of good news happens after 4 p.m. So maybe at like 4:02, the market closes, boom, good news comes out. Well, now a bunch of people that are able to trade in post-market and pre-market are going to want to buy. So all those people are buying, which means by the time it comes back to the open right here again, now all of a sudden it's at, $11 and let's just say 50 cents open. So in that situation, what would happen? It closed at 10, it's opening at 11.50. That means it's gapping up in price. That would be a gapper. Now, gappers can obviously be a gapper down or a gapper up. But as far as what a gap up or a gap down is concerned, that's what that is. All it means is what did a price close at from the official close of the market, and then what does it open it up at the official open the next day. And that's going to determine whether it's a gap up or gap down. And then of course, what determines the actual gapping nature is everything that's occurring in post-market and pre-market. So the next time you hear somebody about saying, oh wow, it's gapping up or it's going to gap up, that's just because all these external things are going on outside of those normal hours, and that's what's causing that. Within normal hours, nothing can gap up or down because everything is trading. A gap can only occur from a closing price, and a closing price only occurs every day at 4 p.m. Eastern time. So that is what a gapper is. That's how it works. So next time you hear a gap up or a gap down, you now understand these are all the dynamics at work. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.